Hey everyone, I'm so glad you're here, because today we're going to unravel something that might seem intimidating at first, but is actually super interesting and important for your financial future. The stock market might sound complicated, but at its core, it's really just a giant online marketplace. Think of it like Amazon or Flipkart, but instead of shopping for gadgets or clothes, you're shopping for tiny pieces of companies. Instead of buying a new phone or headphones, you're actually buying small ownership stakes in some of the world's biggest and most exciting businesses. This process helps companies raise the money they need to grow, launch new products, or expand into new markets. And for people like us, it's a way to invest our savings and potentially earn profits as those companies succeed. Imagine a digital bazaar where the shops are companies like Reliance, Tata Motors, or Infosys, and you can actually own a slice of their success story. It's like being a part owner in your favorite brands. The stock market acts as a bridge, connecting businesses that need funds to grow with people who want to invest and grow their wealth. This cycle is what fuels economic growth and innovation in our country and around the world. Learning about how the stock market works is a valuable life skill. It empowers you to make your money work for you, rather than just letting it sit idle in a bank account, losing value to inflation. Remember, investing isn't about getting rich overnight or chasing quick wins. It's about making smart, informed decisions that can help you build a secure and prosperous future, step by step. In this guide, we'll break down the basics together: what shares actually are, why you need a Demat account to hold them, and how you can start your investing journey with confidence, even if you're a complete beginner. My goal? To make this feel like a friendly chat between friends, not a boring math exam or a confusing lecture. By the end of this series, you'll have a clear, simple picture of how the stock market works, and you'll feel ready to take your first steps as an investor. So grab a cup of chai, get comfortable, and let's dive in together. Ready? Let's get started on this exciting journey. Let's start with the basics. A share is simply a tiny piece of ownership in a company. Think of it as a small fraction of a much bigger pie. When a company is created, it can divide itself into thousands, millions, or even billions of these pieces, called shares. Each share represents a claim on the company's assets, profits, and sometimes even a say in how the company is run. Imagine a company as a big pizza. Each slice is a share. The more slices there are, the smaller each one is, but every slice is still a part of the whole pizza. If you and your friends each take a slice, you all own a piece of the pizza, just like shareholders own pieces of a company. When you buy a share, you own a slice of that company. It doesn't matter if you own 1 share or 1,000, each one makes you a part owner. You can buy shares through the stock market, using a broker or even a simple app on your phone. For example, if Cool Kicks Inc. needs money to grow, it divides itself into shares and sells them to raise funds. This way, the company gets the cash it needs, and investors get a chance to own a piece of the business. Buy a share, and you become a part owner, a shareholder. This means you're not just a customer or a fan. You actually have a stake in the company's future. As a shareholder, you have a claim on the company's assets and profits. If the company does well, you benefit. If it struggles, your share's value might drop. If the company does well, your share's value can go up and you might get a dividend, a share of the profits. Dividends are like a thank you from the company for investing in them, paid out as cash or more shares. Sometimes you even get to vote on important company decisions, like choosing the board of directors or approving big changes. Your voice matters, even if you only own a few shares. When people talk about stocks or equities, they mean the same thing as shares. These terms are often used interchangeably in the world of investing. The price of a share changes based on how well the company is doing and what investors expect for its future. News, earnings reports, and even rumors can make share prices rise or fall. It's not just a financial product. It's a real link to the businesses you see every day. When you own shares, you're connected to the companies behind your favorite products and services. Understanding this is your first big step into investing. It's simpler than it seems, and now you know what a share really is. Let's keep going. So, why buy shares? 2 main reasons: capital appreciation and dividends. Capital appreciation means your investment grows as the company grows. Buy a share for Rs 100, and if the company does well, it might be worth Rs 150 later. Sell it and you pocket the difference. That's your profit. The second reason is dividends. Some companies share a portion of their profits with shareholders as cash payouts. Not all companies pay dividends, but established ones often do. If you own more shares, your dividend income increases. A nice bonus for investors. For many, especially retirees, dividends provide regular income. So, with shares, you can make money both from price increases and from profit sharing. That's why investing in shares is more rewarding than just leaving money in a savings account. It's about building wealth over time, not overnight. Choose good companies, and your money can grow with them. That's the real power of investing. Ready to see how to actually own these shares? Let's move on. Excited to buy shares? The world of stock investing is thrilling, but before you can jump in and start building your portfolio, there's an essential first step you can't skip. You'll need a Demat account, a digital locker for your investments. Think of it as your personal vault, where all your shares and securities are stored safely in electronic form. Demat stands for dematerialization, which means your shares are held electronically, not as paper certificates. Gone are the days of worrying about misplaced or damaged documents. It's like a bank account, but for shares instead of cash. Just as your savings are safe in a bank, your stocks are secure in your Demat account. When you buy shares, they're credited to your Demat account. When you sell, they're debited. Every transaction is quick, seamless, and happens with just a few clicks. This system is safe, fast, and eliminates risks like theft, forgery, or loss of physical certificates. You don't have to worry about paperwork or courier delays anymore. In India, having a Demat account is mandatory for stock market investing. It's a legal requirement, and you can't buy or sell shares without one. Every transaction is recorded electronically, ensuring your ownership is secure and transparent. You can check your holdings and transaction history anytime, anywhere. The Demat account is just for holding shares and other securities like bonds, mutual funds, and ETFs. It acts as a central repository for all your investments. To actually buy or sell, you also need a trading account, which is linked to your Demat account for smooth transactions. Usually, brokers open both accounts for you and link them to your bank account, making the process simple and hassle-free for new investors. The process is straightforward. Transfer money from your bank, place an order through your trading account, and your shares are stored in your Demat account. Everything is interconnected for your convenience. It's a seamless 3-in-1 system that makes investing accessible to everyone, whether you're a beginner or a seasoned trader. Without a Demat account, you can't participate in the stock market at all. It's your ticket to enter and start your investment journey. So, your first step as an investor? Open a Demat account. It's quick, easy, and can often be done entirely online. It's your gateway to the world of investing, opening up opportunities to grow your wealth and achieve your financial goals. Ready to get started? Let's see how to open your very own Demat account. Opening a Demat account is now as easy as signing up for a new app. First, choose a depository participant, DP. That's just a broker or bank authorized to open Demat accounts. Popular options include banks like HDFC or ICICI, and online brokers like Zerodha or Grow. The process is mostly online. Fill out a form, upload your PAN, proof of address, proof of income, and bank details. Complete a quick eKYC, often via a video call, to verify your identity. Once verified, your Demat and trading accounts are activated, usually within a day or two. Compare brokers for fees and features before you choose. Many offer zero account opening charges and low brokerage. Perfect for beginners. With your Demat account ready, let's talk about where shares come from, the primary market. This is where companies sell shares to the public for the first time through an IPO, initial public offering. Think of it like buying a brand new apartment directly from the builder. The money you pay goes straight to the company, helping it grow or pay off debt. To buy shares in an IPO, apply through your broker's app using SBA. Your money is blocked until shares are allotted. If the IPO is popular, you might not get all the shares you apply for. Allocation is often done by lottery. Buying in the primary market is exciting, but not guaranteed. It's your chance to invest in a company right from its public debut. If you get allotted shares, they're credited to your Demat account. After the IPO, these shares move to the secondary market for regular trading. Let's see how that works. The secondary market is where most stock market action happens. Here, investors buy and sell shares with each other, not from the company. Stock exchanges like NSE and BSE are the platforms for this trading. Think of it as buying a used apartment from another owner, not the builder. Share prices change every second based on supply and demand. You can log in, see live prices, and buy or sell almost instantly during market hours. The company doesn't get any money from these trades. It's all between investors. The secondary market provides liquidity, letting you turn shares into cash quickly. Settlement is fast, usually within a day. This flexibility and ease make the secondary market vital for investors. Now let's compare the two markets. Let's quickly compare the primary and secondary markets. In the primary market, you buy shares directly from the company during an IPO, and your money funds the company's growth. In the secondary market, you buy and sell shares with other investors. The company isn't involved. Primary market prices are fixed or set within a range. Secondary market prices change constantly based on demand and supply. In the primary market, you apply for shares during a specific window and may not get them. In the secondary market, you can buy or sell any listed share anytime during trading hours, as long as there's a willing buyer or seller. Think of the primary market as buying new, and the secondary market as buying pre-owned. The secondary market offers more flexibility and immediate execution. Both markets are essential parts of the investing journey. Understanding the difference helps you know where and how to invest. Ready to take your first step? Let's wrap up. That's it. You've learned the basics of the stock market, what shares are, why people invest, and how to get started. You now know about Demat accounts, IPOs, and the difference between primary and secondary markets. Remember, you don't need a lot of money to begin. Start small, even with a single share. Treat your first investments as a learning experience. Read, watch, and stay curious. The more you learn, the more confident you'll become. Investing is a marathon, not a sprint. Be patient and focus on your long-term goals. Don't worry about daily ups and downs. Stick to your plan. The most important step is starting. Explore, experiment, and build the habit of investing regularly. Your future self will thank you for taking this step today. Happy investing! You're ready to enter the world of financial growth. Good luck!